Get Rich Slow with John Wolf. Hey, today I want to talk to you about the biggest misconception people have about credit. And I'm going to go into a little bit of detail about what you can do to improve your credit score and what you can do to repair damage from the credit score. But for the real story and to get my real advice, you have to actually reach out to me. I have special tools that I can use where I can run your credit and then use this program, and it'll actually give you a printout that says do X, Y, and Z, and then your credit will go from 620 to 710 or whatever. And by the way, being able to improve your credit score 50 points in less than 45 days with a few little tweaks that might not even cost you any money is super common. So I look for all of my clients. That's one way I save people a lot of money on their home loans. But let me go over the biggest single misconception. So a lot of people don't understand that your credit score is a Polaroid snapshot. It's an instantaneous look. It's actually not a history. And that might sound weird because people talk about your credit history, and there is a history too there, but here's what your credit isn't. So your bank account, like let's say you have a normal W-2 job and you get whatever, $2,000 a month take home pay, and then you have various bills. So, in October, you might have $2,000 in your bank account. And then in November, by the time the month's over, you have $2,400. And if I am trying to get you a home loan and I need another bank statement from December, your December bank statement balance is going to be mostly the result of your November and October bank statements, because it's a ledger. It's just a history forward in time. And that's actually not what's going on with your credit score. So as far as it is just a snapshot. So the biggest thing that instantaneously changes most people's credit is the balance on their credit card. And the number that's usually shown up on the credit score is the statement balance whenever you get your statement balance. So I know myself personally, the credit card that me and my wife use to pay for most of our household things charges up about $2,000-ish a month. And I have it auto set to pay off in full out of my checking account. But 1 month we might only spend $1,300 because we didn't really do anything. And another month we might spend $6,000 because we went to Disneyland. Well, if the maximum balance on that credit card was $5,000 and we pulled my credit after the statement balance for that trip to Disneyland, I'm going to have a much lower credit score than I would if it was on one of the $1,300 statement months. And unless you stop using your credit card after you pay and wait for the next account statement to come out, what I pull on your credit score is going to be that past amount where you did owe money on your credit card most of the time. Now, that's not always the way it works because every single credit card seems to report slightly differently. But what's not happening is the credit score isn't based on what your average balance is over a year. It's based on what it is right now. And the same thing is also true if there's like a medical collection that can lower your credit score a bunch. But if you settle in full which doesn't mean you paid every dollar, but they took a settlement in full for your medical bill and then they remove it from your credit score, from your credit bureau, as soon as it's removed, it's just gone entirely. The negative 50 points it was giving you before, it doesn't fade away over time. It's just gone once that happens, as soon as I do a new credit snapshot. So that's partly the most frustrating thing about credit scores, and that's partly the most important thing to understand, because a lot of people talk about building your credit over time, and time is, because of the snapshot nature of it, time is sort of not a thing. Now it is a thing a little bit because the credit that the number of positive points that an installment account like a car is worth or a credit card does increase over time, and the negative points from having something late does decrease over time. But those effects are hugely overpowered by the instant changes that you can get. And by instant, I mean you might have to wait for the change to report to TransUnion, Experian, Equifax, and it's 3 separate reports, so they don't agree a lot of the time. But as soon as it is there, it's done when we do the credit pull. Also, one thing that people are sort of misled by are the sort of instant credit score reporting things. Credit Karma just happens to be the best known. It is often wrong. The main reason it's wrong is because the Fair Isaac Corporation doesn't give freebies. They charge me basically $35 a couple to pull your credit. And then also there are different credit scores. So your credit score for getting a store credit card is different than your credit score for a car, is different than the house. And the only credit score checking service I'm aware of that's even kind of close or differentiates the types at all, I believe is Experian, if you pay them, offers you your ability to pull your own credit score. But that's the most accurate one I'm aware of anyways. But anyways, I hope this was helpful, and I hope it helps change your understanding, because, credit score is a game that you and me did not agree to be placed inside. But since we are, let's know the rules and let's use them to our advantage. Have an awesome day. Bye.